It looks like you're a little bit excited with the Solana.
Solana is fun. I mean,
yeah, what do you think? Why it's so popular? Because from my perspective, let's say Bitcoin, this is a fully decentralized. Ethereum, it's like a builder for everything. And the Solana, this is like, like a big computer that solves very common problems. And the more power they get to this computer, the faster it works. But it crashes all the time. It stops all the time. But what I saw in English space, also in Twitter, all these meme coins on a Solana. I think you saw the Book of Meme, smaller coin, Boba Opa. The guys raised tens of millions of dollars for nothing. And this all on Solana. And I see how the Digans, the guys who spend a lot of time in Ethereum and digging deep there, they started to move to Solana. What happened, man? Why Solana is so popular on this cycle?
Recently, there's been a lot of congestion. A lot of the transactions fail. They don't go through. You have to keep on hitting retry. But look, these things are good problems, I think.
This is a problems of growth.
These are problems of growth, right? You want these kinds of problems. You don't want the other problem is no one using it. What do we do, right?
Yeah, I get it.
This one is very interesting because I think there's an opportunity for the Solana teams and all the community to figure out how do we either allow for fees to be prioritized or not, or how do we make the nodes themselves a little bit more powerful. It's a good problem to have. And we've seen on our wallet also, which supports Solana, we've seen a lot of this activity too. The meme coin stuff, very popular, like you said, but I think it's more importantly, some of the applications on Solana, Jupiter, some of these DEXs.
They're growing faster.
Exactly. And the ecosystem is there, right? And which allows for these meme coin community members to come in and very quickly, if the transaction works, very quickly get involved and you can start small, right? And the fees are relatively low. It's a great example of something that's trending well.
I have a discussion with some of your top affiliates and on one of our podcasts, how we generate a lot of users to the OKX. He just told me, hey Nick, I just opened an OKX and the OKX pays me 52% for a USDC investment, AP annual return rate, IRR, and around 42% for the USDT investment. I think you know this, when the funding rate was crazy, the exchanges pays around 40% annual rate for the coins. Can you explain the original of these rates? I know that this is a flexible rate, and one hour it was 10%, the other hour it was 30%, the third hour it was 42%. But that's crazy. When exchanges are ready to pay 40% annual rate, yes, in a short-term perspective, in 2, 3, 4 weeks, for the just 2 clicks. So you can invest with a 30% annual return in just 2 clicks on the exchange. It scares me. Like, oh, maybe these guys doesn't have enough liquidity in one way. In other ways, okay, maybe they don't use my liquidity in all the things. That's good. If you're familiar with these things, what is the origin of these rates?
I think it's important to look at, I think actually for your users too, to understand where those numbers come from. If I'm understanding you correctly, you're talking about the margin rates, right?
Margin rate. I'm talking about the product called growth.
Yes. So within that, you can choose a simple.
Yeah. In a simple,
so that's
fully flexible.
We can double check this if I'm understanding correctly, is that what's happening is that there are users that will deposit USDT or USDC and get the yield. But on the other side, there are traders that are trying to borrow to trade. So they are the ones paying the users. We don't do that. We don't lend money. We don't borrow money. The platform doesn't do any of that. So whenever you're seeing rates like that, if it's not a DeFi staking,
it's a futures,
then almost certainly it's a users matching. So if there's not, and the rates get high when there's not enough, a lot of people want to borrow, but there's not enough people depositing. That's typically when the rate goes higher. And that's why you can actually kind of see it with the market.
This exactly. Going like this.
Yes. And you see the market is like, people are not interested. They don't need the dollars anymore. Then the rate goes down because they don't borrow as much. And therefore the balance is now shifted. That's how it works. That's where that number comes from. So we don't set it. We don't do anything with it. It's really just a market and demand. Yeah. Exactly.
Do you invest in crypto or do you trade? Because I know that I have a discussion with Binance guys and they told me that they don't allow it to trade, for example. Maybe again, you share something interesting.
For us, especially when there's new tokens, we're not allowed to touch anything that's new or that we might have any sort of sensitive information to. But for me anyways, I'm so busy all the time. I just kind of buy and hold. I'm more of a dollar cost average kind of person. I like some of the main coins and I'll put a little bit and just over time. That luckily has paid off for me so far.
I hope so, yeah.
Yeah, I mean, it's been okay. You could always buy more, right? Earlier, maybe with hindsight, regret a little bit, but it's okay. I think it also keeps my stress pretty low.
Oh, really? I get it.
We're already so busy, right? And it's like, I can't also check the price and also worry about all this stuff.
Hey, if you like this video, don't forget to watch a full episode and also check the links in the description below.